Hello guys, welcome back to another video and welcome back to CryptoKeep analysis. So in this video I want to show you why you should always endeavor to take the trades you spot, and not because it doesn't meet some part of your entry criteria or entry filter, you shouldn't take it. So what I'm trying to say is how to stop missing out on some probable good trades. I will show you this with two charts. One is on Gala Theta, then the other on CHR. So to start with, I trade with market structure and supply and demand. And once I have a bullish structure like this, and price gets to make at least 50% retracement of that large swing, I want to watch for its demand area very close to the invalidation point, where I will be taking a long entry. And if price happens to break that invalidation, then I will be looking for a sell signal at the very top, close to an invalidation, where I can probably get my supply zone. So there are some entry filters or entry criteria which I have set for myself, which even if price makes an higher high in a bullish move like this with a bullish market structure, I will not take the entry on the on the demand that formed. And what kind of entry criteria could that be? Sometimes we cannot tell. If I used to say that we do not move the market, right? So we cannot exactly tell when our setup will work or when our setup will not work. All we can do is to identify the best setups for ourselves that looks the setup that looks very good to be taken, and then we take it. Sometimes very good setup works very well, while sometimes very good setups breaks and trigger as stops, either due to hunting or due to trend change. So because we do not move the market, we cannot exactly tell which one will work. That is why once we see a setup, we should endeavor to take it in as much as the structure is still bullish. Now let's get down to it. So there was a trade I saw on Gala. I was able to take this trade from, what point is it? From a very low point around there before the break of this side. And then I got out with 3R. And ever since then, it was around 900 something. As you can see, price has made over 370%. And I took just a meager 9% of the trade. And since then, I'll not be able to get back in. Not because there weren't opportunities to get back in, but because I just didn't trust the setup. So let me show you what happened exactly. So after I took the trade at this point, somewhere around here, on lower time frame, I think 30 minutes after I took the trade, and I exited the trade, then this setup happened. I was waiting. Okay, I was waiting at this point here. I remember I was waiting at this point, but when price came there, I was waiting much lower here. I remember I was waiting at this point on the 30 minutes. This is a 90 minutes OB, where I have this -9 where I could have entered. We were discussing this trade in the group where I was waiting. Price was here and I was seeing it, I could have even entered without risk, but then I wanted a full risk reward. I was adamant and I was waiting at this particular point. So price didn't get me filled, but price then bounced from this particular point. And if I look at it from this particular line, right, I can exactly see, okay, that is 9749. 97 is good. And since then, price has gone at over 297%. And I missed out on that trade. Then what happened again was that after that trade was missed, I had another setup here where we have an high, price made a low, then we had a rally up. I drew this zone that I was waiting for price to come back in, but price never came back. Price was so adamant, it didn't come back. Then price from the top at this point, pulled back. Here was, I think there was a zone here on the 30 minutes. Let me be sure. Okay, yeah, we had a zone here because we had a top here, we had a move lower than it, then we had an high. So we had a small pullback here. So here was a very good entry on the 30 minutes. But then I wasn't even willing to enter this trade on this 30 minutes because the pullback was very small. So it was a pullback we had a top. If you have been watching my pullbacks video, you will know why we have a top here. So this was a pullback and then we had a high. So I should have taken this trade, but I was like, no, the pullback is too small. There may not be enough sell orders to fill buy orders. So this move up might be a fake move. Then, we can't always pay attention to everything at every moment. I wish I had looked at my volume. I could have seen that there was a volume out. There was a volume out of that zone here. So it could have presented a very good opportunity, but I didn't pay attention to the volume. I was just paying attention to price, so I didn't take this trade. I missed out on the trade. Then what happened after that? We made another high to this particular high. Let me go back to the 90 minutes. So this was a high now, then we put back, then we made another high. Then after seeing this higher high, this is the kind of setup I do not want to take. As you can see, I have it marked out, but then I didn't take it. So why didn't I take this trade? And if you can see, like I said, we still have a bullish structure. We have a move up, a move down, then another high, right? In as much as we made a high to this side, we are still in a bullish structure, and I do not move the market, so I cannot tell if this place will be a good buy or a good sell. That is trade psychology. But then I wasn't dealing with trade psychology as of this moment. I wasn't even thinking about risk management. What I was thinking about is having the best setup. I only want to risk my money on the best setups. So because price now didn't close above these very highs, we have only a wick and then a close below. It wasn't a good setup to me, even though we were still bullish. But because we didn't have a close above of it, it didn't qualify as a good setup for me to take. So I was expecting price to at least come to this area or come for a full retest here and then proceed back higher. I wish we had a close above of this size. I would have taken the trade, no cap, no doubt. But then I didn't take the trade. And what happened? We saw price coming to fill this zone. And if you can even see on this zone, the invalidation point was right here, right? We didn't even get a move. We went close to the invalidation, but we didn't touch it. So we didn't break it. The trade was intact, and I would have had my stop somewhere around here. So on this trade, it would have been a very perfect trade if I had taken it. But then because we didn't have a close above of this size, I didn't take it. I was expecting price to turn bearish at this point, then come either here or here to then bounce for a bearish retest or continue to be bullish. You wouldn't blame me on this trade because I've seen this setup many times, which just ends up breaking the zone. but on this particular one, it worked very perfectly. And I marked it on the 30 minutes. I marked this on the 30 minutes, I think. Yeah, I marked it on the 30 minutes. It came into it many times, then rallied up. But then, even if I had played with the 90-minute zone, which would have been from this point, from this last candle down, which made the lowest low making candle, I would still have made a lot of profit. What would my risk be like? My risk would have been like 7 or 8%, and then we topped at 75%. Risking 8% to make a whopping 75% is a whole lot. Then I missed out on this perfect trade. Now, let me show you one of the reasons why I don't usually like to take this type of setup. But now it seems I will start taking it, because you can never tell which one will work. You should just use stop loss and manage your risk accordingly, and then you'll be fine. You get to lose some trades, and then you get to win some. So, okay. All right. If you look at this particular trade here, if you look at this particular move, we have a move up, then a move down. We had this size. We had a move above of this side, the same as we had on Gala. But then I took this particular trade. I think, after it has invalidated this move down, or I don't quite remember. I also took this trade on the 30 minutes. I took the trade on the 30 minutes. I don't know if I can see it now. It's a bit far behind. Okay. Yeah, I think I waited for it, or I think I took it after a break of this. I can't quite remember. So I took the trade, and then it worked out perfectly. But then naturally, I wouldn't have taken it. Now let's see why I wouldn't have taken it. If you look at this particular move here, let me invert this chart. Let me go to the 4 hours clearer. Okay, let me invert this chart. So, okay. So, we have some move down here. This is an inverted chart, right? But we have a move down. We have a break of invalidation. But then, no, let me just use the 90 minutes, because that wasn't a very good pullback there. Okay, so we have this move here. We have this down move, this up move, this down move, this break of invalidation. We went above these very highs. That means price has turned bullish. Then UE wants to long at this particular point. You had an ABC type of correction here, ABC, and then this is a continuation high to break, right? And then what happened? We got a move above of it, and therefore to have a move above of it, it means the price is still bullish. We just had a move up, move down, then another move. So we are still in a bullish market structure, right? But then we do not have a close above of this size. So naturally, the demand that I would have probably taken at this point, I wouldn't have taken it. And then just because we do not have a close above that last size. So then when price came into this demand now, we got a bounce, a little bounce, and then what happened? We got a break of that zone. So this is just the reason why I do not like to take this type of setup when we do not have a close above the highs. And for bear moves, this would have been a no close below the lows. So this was why I do not want to take such type of trade, because there is high probability of them breaking, even though they can offer you a little reward before breaking. And if you look at this particular one, it got broken. So this is exactly why I do not like to take that kind of setup. and then it beats me in the ass by it doesn't always conform to it. So we had 3 setups, 2 didn't close above the highs and they worked perfectly, while 1 didn't close above the highs and then it worked or worked as I wanted. So this is why if you see a setup, in as much as your structure is still bullish, you should endeavor to take the trade, because you can never tell if that trade you are not taking will offer you the best risk reward. All you can do is just manage your risk, and if that trend happens to change, then you can always take another trade in the opposite direction, or you can go lower to trade the lower demand for a bounce up to that next supply where you probably get to fill your short entries. So you can look around your charts when you have a bullish structures like this, when you have bullish structures like this, and price not closing above the highs like this, then see if the pullbacks resulted or results in an higher high, or it breaks down easily. If you look at 10 of these setups, if 5 works and 5 doesn't, then there is a 50-50 chance that when you take this trade, you are going to at least make money from it. And with decent risk reward, losing 1 to win more than 3, more than 5, then overall you'll be profitable. So that was how I ended up missing on a very good trade on Gala. It can be painful, but then what can you do? What can you do? Trading structure at times can be complex. So you just want to take the trades when you have a setup. Don't do like me, because you do not have a close above the highs. Take the trade, use stop loss. If you lose out on it, no problem. But then if you think you may lose out on it, you may end up missing a very big opportunity to make very good money. And as you can see, I wish I had taken this trade. It could have been an 80% move with just less than 8% risk. So as you can see, I missed a very big opportunity there. A very big opportunity. And looking at this entire move on this particular time frames, okay, we had a top now, we had a move, this was sideways inside the bar, a move up, a move down, now a move up. And if price choose to come back into this zone now, I will be interested in taking this demand zone, which also happens to have an OB or institutional candle right inside of it. Let's hope when it comes down there that I'll take the trade. So don't let us procrastinate. Let us be more active with taking trades. There are a lot of things going on in the market, but then because I say you should just take the trade and use stop loss doesn't mean you should take the trade at any point and use your stop loss at any point. You want to see a setup first. When you have that setup, then you can take the trade with proper risk management. That is trade psychology. You do not control the market. You cannot tell if the worst looking zone you have will be the best in terms of risk reward. So that's it, guys. Let's endeavor to take the setups that we find. Thank you.